Hi and welcome to the weekly market update. It's Tuesday the 23rd of April 2013. So the focus last week was on the commodities market. We saw the large declines last week, particularly in gold. They made back some of those declines towards the end of the week and also into this week. Currently we have got gold trading at around 14.10 and Brent around 99.30. Also in terms of data over the weekend and at the end of last week, we had the Fitch downgrade the UK to AA+ from AAA on Friday afternoon. Also over the weekend out of Europe, we had Italy re-elect Napolitano for the presidency. He's hoping now to form the government this week and sort of push on with that in Italy. This morning we've been quite busy in terms of data after a quiet day yesterday. Chinese PMI manufacturing data came in overnight, came in at 50.5 against the 51.6 expected, so slightly weaker there. And then throughout Europe this morning we've seen weaker flash PMI data out of Germany particularly, which is the manufacturing PMI came in 47.2 from an expected 49. And services, which were expected in the expansionary zone above 50, came in weaker at 49.2. So that pushed the composite pretty much in line with expectation, actually, the European composite at 46.5, but still firmly in the contractionary zone for the PMIs throughout Europe, so below that 50 level. In terms of data that we're going to see out this afternoon, we've got US manufacturing data as well, alongside their home sales, so those to watch out for. Into tomorrow, into Wednesday, we've got the IFO survey out of Germany. This is a confidence survey, renowned for being slightly higher than the other surveys we see, like ZEW. So interesting to see if this remains elevated or if it is being pulled down on the back of the weaker data that we've seen coming out of Europe. Out of the UK, we have mortgage loans and we've also got mortgage applications from the US, and also from the US in the afternoon. Probably the big number is going to be durable goods. The last reading of this we saw was quite a bit higher than expected, but when we looked into that, it was actually on the back of the Boeing numbers, so without the transportation, pretty much in line. So interesting to watch this time with sort of the Boeing factor maybe taken out of that. Into Thursday, big number is UK GDP for Q1. Fourth quarter for 2012 came in obviously in negative territory, so to watching out to see if we remain in negative territory for the first quarter of 2013, then we'll be in that triple dip recession, so interesting to watch out for that. We also get the German government macroeconomic forecast. Germany's been sort of the quite stable and the strength of Europe while all the crisis has been going on, but we've seen weaker data maybe dragging that back a little bit. It's interesting to see how the government is balancing and managing its macroeconomic forecasts on the back of the weaker data that we're seeing. And into the afternoon we see the initial jobless claims and continuing claims out of the US. Finally into Friday, another big GDP reading out of the US. We get their GDP reading for Q1, expected at 3% from the previous of 0.4, so quite a large increase there for their GDP, which would show good confidence out of the US. We also see German import price index in the morning and also Eurozone money supply alongside that announcement of the LTRO repayment, which is ongoing. Also, we get out of the US in the afternoon core or personal consumption data, as well as the University of Michigan and another sentiment survey. So, watching out this week, sort of how the commodities are still recovering on the back of last week. We've also got quite a few speakers from the ECB, particularly this week. Been coming out, some of the more renowned hawkish speakers and members of the ECB have been coming out with more dovish tones this week so far. We're expecting to see quite a few more people out on the wires, so interesting to see what they say and how it's sort of affecting markets, if they still continue with that dovish tone. If they do a lot of talk around weaker, if the data continues to be weak, we could see a potential rate cut. They will look at rates and how those are being set, so key thing to watch out for on the going forward to the ECB meeting next week. People are particularly paying attention to all these clips and sound bites to see if there's any hints about what they might be doing with rates next week. Okay, that's all for this week. As usual, any feedback is much appreciated. Thanks.